Welcome back to Yahoo Finance. Well, this year has been a tough year for startups looking to raise money. There's new data out from Crunchbase that shows that early stage funding fell once again in November, down about 34% from a year ago. So here to discuss what the past year has been like and also the state of play for the VC industry, we want to bring in Bilal Zuberi. He's a general partner with Lux Capital. Bilal, it's great to have you here. Thanks so much for taking the time.
Great to be here.
So let's talk about how tough or challenging this past year has been. At Lux Capital, you guys have about $5 billion in assets under management. You're funding, mostly funding science and technology types of companies. So what have you seen some of the trends over the last 12 months?
I mean, look, generally speaking, the last 12 months have been a downer for the industry. There's been fewer financings if you take AI outside a little bit. Lack of IPOs, lack of liquidity for our LPs, and we're very cognizant of that. That has meant a lot of belt tightening for a lot of startups, a lot of changes in operational plans that allowed them to reach profitability sooner. That has meant layoffs, that has meant a lot of change in planning on what the company accomplishes. At the same time, we invest in a few broad areas that we consider to be not only important for society, but also where venture dollars have been flowing in. Things like securing our borders, securing our freedoms, and securing environment. A lot of money has gone into defense tech and continues to go in. We've been beneficiaries of that. We work a lot in increasing productivity of human experience, everything from mobility to the way we do work at home and in our offices. A lot of money has gone into that. AI has been a part of that. We do a lot of investments also in improving human life and condition and reducing human suffering. And there's been a lot of money that's gone into that as well, in drug discovery companies and so on. And frankly, there's a little bit of an M&A that's been happening in the last few weeks and months. So we've been watching that very carefully there, some very large ones. And then last but not the least is, unleashing human creativity, where we've invested in companies like Hugging Face and Runway and many others that is really, democratizing access to technology. I mean, there's literally, I can sit online and watch television stations now where you can watch completely AI-generated movies. And so there's a lot of interesting things happening at the same time. But as I was telling the conference here earlier today, it's always good to be here and with public market investors to really calibrate for private markets as well, and to understand all these companies that are now Series A, C, D, E, whatever stage, they're eventually going to be either public company or get bought by public companies. What will be expected off of them? And I think that is there's been a real dose of medicine that private investors have had to take.
And how have those expectations changed?
So I think 2-3 years ago, it was all about top line growth. Everybody was looking for growth and where can you find growth? And that was what the VC was known for. And now people are looking for building real businesses and building profitable businesses. There's this thing called profit that startups can aspire to as well. And I think the reality of it is that, if 2, 3, 4 years ago, startups used to be very narrative driven, they've become very much metrics and operations driven. And I think that has required VCs and founders and CEOs and executive talent that's been hired over the last 2 years to really hone in and understand how do you actually build real businesses.
And do you think that's the case for AI as well? And I just bring that up because there's been so much focus on that, much of it being hype, much of it being more of an excitement rather than a show me, prove me story, at least up until this point. Is it a little bit different when it comes to some of those AI plays?
Yes, look, AI is still or at least generative AI, which is this new wave that we're going through, is still fairly new. The pace of development has been incredible. In fact, every time I look at it, I'm astounded how fast it's moving and how fast it's moving into every facet of our society. Some of the valuations will remain high and will remain perhaps inexplainable. But even in AI, in the first quarter of 2023, the valuations were off the charts. Frankly, it didn't make any sense. And I think the reality was everybody was trying to place their bets. I think people have sobered up a little bit, not as much as they probably should, but they have sobered up a little bit to basically say, are we actually using AI to build businesses and solve problems? And to be honest, in some ways, you saw that in the very public drama that happened at OpenAI, right? I mean, the shuffling around that happened was a little bit of, are we a research firm or research-only firm, or are we also a research-only firm that now has shareholders and, frankly, even employees that hold equity into the company, and we have to build a business for them?
When it comes to your specific investment criteria, you mentioned some of the companies that you're involved with. When it comes to the AI or those who have exposure to AI, Runway, Hugging Face, just to name a few of those, what is your criteria when you're out there trying to identify that next investment?
So we invest at the intersection of technology and sciences. So we're always looking for where's the cutting edge work happening. So if you look at Hugging Face, it's the cutting edge models developed open source all around the world, made available for everybody to use. Together doing the same thing with enterprise applications in mind and providing the infrastructure to make that happen. Mosaic ML was another company that Databricks acquired in this year, just a few months ago. Same idea, building that. Runway ML is cutting edge on visual, creating videos. But then also again, companies like, we've done some, stuff, large investments that are still in stealth mode around, using AI for drug discovery purposes, right? We've done work around using AI for defense tech purposes and national security and cybersecurity. My last investment, we literally wired the money yesterday, is in AI cybersecurity. If AI is being used by not only every person at home, but every employee in your enterprise, and every app, every SaaS app that you're using is using AI, how do you think about securing the data that and IP that you have from leaking out and securing that? So there's a lot of interesting stack that's getting built up. And I think the beauty of it is why you see a lot of VCs interested in it, is that you could be investing in any space at any stage and you will find an interesting AI application there.
From the discussions that you've had, and Hugging Face is one that I'm thinking of, when you talk about the potential for it to go public, are business leaders, are they a little bit more open to potentially entering the public markets as you look ahead at 2024 and beyond?
I think people are very open to making sure that they are building companies in a way that they could go public. I don't think the public markets are open yet, at least not for a lot of companies. So people are still waiting for the larger companies, the Databrickses of the world, the Stripes of the world to go public first. But certainly people are starting to think a lot about, building these companies responsibly, financially responsibly, ethics-wise responsibly, and with global markets, understanding where the regulatory landscapes are that they're going to be playing in. These AI models are being used in every application, right? You're building games with it, you're building dating apps with it, but you're also discovering drugs that are going to go through FDA processes, and you're building, tools of warfare. So you have to be very carefully building that, and I think companies have brought on executives to help them think about revenues and margins and large enterprise contracts. And why you're seeing some of the companies like Hugging Face, Together, and others grow is because they're serving the needs of their customers much more efficiently and effectively.
Bilal Zuberi, great to get some time with you, general partner with Lux Capital. Thanks so much.
Thank you so much. Great meeting you.